Allegations of fraud, forgery and a cover-up have emerged from a Senate inquiry into the financial regulator and Commonwealth Bank.
Alrighty guys, welcome back to the channel, and today we're going to be going over what are the best trading apps to buy and sell shares for Australians. And I'm also going to be going over why you shouldn't be using the big four banks anymore for your investments. Not when the alternative options out there are just way too competitive. And I know there's plenty of doubts and questions around using alternative platforms. The main one and the biggest one is my money safe? So we're going to be covering that today. We're also going to be covering taxes when it comes to investing in the US markets on these platforms. Now, these videos do take a lot of time and effort to create, so if you do enjoy today's content, please don't forget to absolutely smash that like button. And you can now see a graph on your screen. It doesn't make much sense. All you can see is percentages. So I'm going to put a bit of context behind those percentages for you. What this graph depicts is a $500 investment in the ASX, and what the percentages represent is the percentage of return that you would need on that investment in order to break even after the fees of trading on the platforms. Now, as you can see, there are 7 bars for 7 companies, and you can see that the 4 on the left are significantly higher than the 3 on the right. But this probably doesn't give you too much context, so let's also add in trading $500 in the US market and seeing the percentages that you would need in order to make an even return. Now, once again, and this is going to be the theme for this whole entire video, so strap in, the 4 on the left being significantly higher, one of them going all the way up to 11.8%. That means you would need to make a return of 11.8% on your $500 before you even break even. And then you compare that to the 3 on the right, and you can see once again, they're much, much lower. And I'm now going to reveal to you the companies. And as you can see, stark, unbiased proof before you knew the companies that the 3 on the right were just simply cheaper to use than the big 4 institutional banking systems. And no, I'm no moron. I know people invest with either less or more than $500 when it comes to these markets. But the reason why I've used $500 is for the beginner investors watching that don't know that when you first invest in the ASX, you need a minimum deposit of $500. And this is because the ASX labels this a parcel. Now, after this $500 initial deposit into the market, you can invest with whatever monetary value suits your style of investing. So with that being said, let's dive even deeper into the fee arrangements on these 7 companies. So we're going to start with trading with $0 to $1,000 on the ASX. And we're going to start with the big 4 banks. And as you can see, Commonwealth comes in at the highest with $29.95 and NAB comes in at the lowest at $14.95. Whilst Westpac and ANZ are neck and neck at $19.95. But as I said, we're not here for the institutional banking. We want to see what the alternatives are in this space. And so the 3 companies that we're going to be evaluating today is Superhero, Stake, and Self Wealth. And as you can see, they come in at $5, $3, $9.50. You can just see they're absolutely wiping the floor with institutional banking. Now, you're probably justifying to yourself, it's only $0 to $1,000. Obviously, smaller companies can compete with smaller lumps of sums. They must be losing out on the higher sums. So let's go even further and bump up the numbers. So now anywhere from $1,000 to $10,000, the fees don't really change for the big 4s, with the only changes being NAB coming in now at $19.95 when it comes to $5,000 to $10,000, and ANZ following suit with now charging $24.95 on $5,000 to $10,000. And now you're probably thinking, now it's going to be competitive because now we're getting into the higher brackets. Now maybe the companies can't keep up with what the big institutional banks are providing because they've managed to keep their fees at roughly the same rate. So let's dive into that again. And once again, you guys, $5 for Superhero, $3 for Stake, $9.50 for Self Wealth. There is no difference. There's no change. And for the sake of me not repeating myself to you guys anymore, this will not change when trading in Australia. You are going to be only paying $5, $3, $9.50 if you're using these companies. But now people might be still interested in seeing what institutionals have to offer on the higher brackets. So we will dive into that. But do know that the alternative options just do not change for you. So with that being said, you have Commonwealth coming in at 0.31% on all accounts from 10 to 20,000 and above. This equals an extra $3.10 per every $1,000 above that threshold. Now guys, I want to take a quick second. You can see these statistics for yourself already. These banks did not make it easy at all. As you can see, as it gets into the higher fees, they all start charging rates at different levels, even though they all know what each other are doing. And then Westpac even went as far as to just hide, not so much hide, but made it really obscure to figure out what their fees were and when they started charging it, to the point I had to do the math to figure out when they started charging a percentage rate instead of just a flat fee. They didn't have it anywhere. I looked everywhere, and all it said was once you meet that minimum threshold, you will then be charged at a percentage rate of 0.11%. Now, the percentage rate isn't even that high. It's actually quite competitive. I just don't understand why they did this. And just for you guys to know, you can see it for yourself, but the charging rate for when it turns into a percentage is at $18,000. Anyway, that's enough ranting from me. I just really had to express it into this video because it took me forever. Now on the table, I added another 2 more categories. One's safety and the other is other. When it comes to safety, what I'm talking about is if these companies somehow went bankrupt, where is your money going? Where are your investments? Can you still access your investments? And so I've gone through and I've labeled them all, and you have your institutional HIN and your HIN. Now, I know a lot of you are probably asking, what the frig is a HIN? A HIN is your holder identification number, and that probably still means absolutely nothing to you. But when trading on the ASX, you are trading under CHESS, and CHESS is a registry system. So it essentially just keeps track of who owns what. So your HIN identifies you and the shares that you own under that HIN. And as you can see, 6 of the 7 companies provide you with your own individual HIN upon application of creating your accounts. So understand that if any of these companies went bankrupt, your shares are not on their platform, they're under that HIN. So you are safe to invest with these platforms if they went bankrupt. Now the black sheep out of it is Superhero with their institutional HIN, which still means that it is separate from the company, and if the company went broke, they wouldn't be touching your shares, but you would have to go through a sort of claims process to access your individual shares on that HIN. Now moving on, we have this other category. I didn't believe I needed to make this other category, but when I went and did my research, something peculiar popped up, and as you can see, 6 out of the 7 companies have nothing. And then you have this $20 a month fee under self-wealth.
Thought we wouldn't notice, but we did.
They didn't hide it, but they did obscure it and try to make it a bit harder to find. It is under your account information. And essentially what it is when you sign up with self-wealth, they don't promote this. They will put you on a free 90-day trial when you first sign up. And then after that 90 days, they will then charge you a $20 a month fee for using their platform. Now, depending on what you're investing with, this might matter or it might not matter, but just understand that those fees are still there. So let's move on to the US markets, because not every Australian wants to just invest in Australia. Sometimes they want to put their money abroad. And we want to see if the alternative options can compete in this space, or if this is where the $70 billion valuations actually come into effect on these platforms. So starting from $0 to $5,000, you have NAB coming in at the cheapest at, once again, $14.95 per trade. And then on the high end, and at an astonishing number, ANZ is coming in at $59 per trade. This just shouldn't be happening. You shouldn't be $1 billion company and not be able to provide lower fees when there is companies out there not even worth 1/10 of your company's valuation able to do it for a fraction of the cost. And with that being said, let's move over to the alternative investments. And you have Superhero, Stake, and Self-Wealth. $5, $3, $9.50. There is no change at all. And for the sake of me not repeating myself for you guys, the alternatives are just wiping the floor with the big institutional banks and aren't changing their rates. But again, we'll still go into the fees of the bigger banks just for peace of mind. So then you have the $5,000 to $10,000 bracket with Commonwealth now coming in at $29.95. ANZ still at their ridiculous number of $59 per trade, and NAB has increased their trading amount to $19.95. And Westpac has followed suit with Commonwealth at $29.95. After that, you then have the 10,000 and above bracket, we'll say, because the only company that changes after that is NAB. So Commonwealth has once again come in at their 0.31% charging rate. ANZ is with their 0.59% charging rate, and NAB, once you're over $20,000, will charge you at a rate of 0.11%. Now you're probably wondering, when I'm trading in the US market, am I just as secure as trading in the Australian market? And the short answer is yes. Your shares are still your shares. So I won't touch on it too much. Once again, 6 out of the 7 companies will give you your own holder identification number. Moving on to other, once again, Self Wealth still has their cheeky $20 a month fee. And the only other fee, I didn't mention it on this chart, but Stake does charge you a $5 setup fee for when it comes to trading in the US market. And that $5 fee covers what we're going to go over in our next topic. Taxes. Love them, hate them, don't want to pay them. We don't like taxes, but they're inevitable and they're a part of our society today. So when it comes to this $5 fee, what are they charging you for? Now, all these companies will provide this service in one way or another, but what it's essentially doing is setting up your W8 BEN form. This form allows you to go from a 30% tax rate to a 15% foreign tax rate due to an Australian treaty between the US and Australia. So you're paying 15% less in taxes on your investments. So yes, when you invest in the US market, you will be taxed if you set up this form, obviously, at a rate of 15%. Then the second question that often comes after that, well, if I'm paying taxes in the US, am I paying taxes in Australia? The short answer is yes. ScoMo is coming for your money, okay? There's no doubt about it. Now, the taxes that you pay will depend on a multitude of factors, and I will leave a link in the description below on where you can find the information on that. But you can also get foreign tax income offsets. So this will essentially reduce the taxes that you have to pay on those foreign incomes that you are receiving. Now, with all that being said, I am not a professional financial advisor. I am not paid in any way to give financial advice. All my content is for educational and entertainment purposes only. So please do not use my videos for personal financial advice. And with that being said, guys, that's it for today's video. If you enjoyed this video, please smash that like button so other users like you can enjoy this content. I'll wait.